Good morning and welcome to Vigilantes TV. I'm joined today by Stephen Wilson-Smith, credit analyst at M&G. Stephen, good morning.
Good morning, Carlo.
So it's Cyber Monday today. It was Black Friday last week. Cyber Monday is the online version of Black Friday, but that means plenty of shopping opportunities in these days. Very good for us, but what about retailers? Is it good for them?
Well, that's a very good question, Carlo. I think the short answer is not really. When Black Friday sales were introduced by Amazon 8 years ago, November sales started to grow, and they've been growing strongly since then, to the point that they're growing much stronger than December sales. And I think you can say that the consumer is actually expecting discounted sales in November. And if those sales are only bringing forward December sales at a discount, then it's not good for the retailer. So I would say Black Friday sales are only good for a retailer when they are incremental and profitable sales.
Okay. And many shopping opportunities for consumers, as we discussed, but also plenty of sales in financial markets right now. Last week was very much a risk-off environment with the oil price down by more than 10%. And there is a chart I generally like to see that shows the Standard & Poor's 500 versus its 200 days moving average. Every time the index is above the 200 days moving average, that generally is a positive signal, as it suggests the bulls are in control. On the other hand, when the index falls below the 200 days moving average, that means bears are in control and volatility is back in the market. So here we are today, the Standard & Poor's 500 is below the 200 days moving average, bears in control and volatility is back. But volatility is not necessarily a bad thing, particularly for value investors, as it can create opportunities. So Stephen, my question for you really is, are there any opportunities in the market right now? I mean, is it Black Friday for investors?
Well, I think there are some opportunities, but some things are cheap for a reason. I think the devil's in the details, so let's go through a few examples. BAT, British American Tobacco. The Food and Drug Administration in the US announced a couple of weeks ago that they would be seeking a full ban of menthol cigarettes in the US. Menthol cigarettes account for 30% of the market, so it is big negative news. Our view is that a full ban would take at least a couple of years to implement, and that the most likely choice that consumers would make would be to stay in tobacco products and probably shifting away from menthol cigarettes to non-menthol cigarettes. In any case, these companies are quite profitable and they will seek to maintain their credit rating and their leverage metrics in our view. So at worst, it's bad news for equity but not for bondholders. Next example is GE. GE currently suffers from high leverage and low cash flow. And that's coming from poor performance, particularly in their power division, where the whole market is shifting towards renewable sources of power generation. But GE still has a great set of businesses, including its aviation business, which is world-class. They've announced asset sales, including their healthcare business, which is now up for sale. So our view is that GE, with some asset sales, can look much stronger credit and back to looking like a strong investment grade credit. Finally, a couple of Italian examples. Telecom Italia has been hit by a new entrant, Iliad, which has come to the market with disruptive pricing, and they've been gaining market share. On top of that, there's been a shareholders' dispute at Telecom Italia, which has led to a change of the CEO. Furthermore, there's been a spectrum auction sales in Italy. There was a 2.5 billion reserve price, and in the end, the auction resulted in 6.6 billion of auction sales for the government. So that's bad for the whole industry. In our opinion, Telecom Italia has not been derailed, just the credit improvements are delayed, but in our view, they'll still get back up to investment grade. And I'll let you talk about the last Italian
Sure,
name.
the Cooperativa Muratori and Cementisti, because there is a big discount there, more than 80%. But as we discussed in a previous episode here at BVTV, there is a structural issue there, and this related to the construction sector. But if I can summarize what we said so far, I mean, volatility is back, but there are also opportunities now back in the market, but we need to be very selective. As you said at the beginning, the devil really is in the details. Thank you, Steven, very insightful, and thank you for tuning in. Have a nice day and happy Cyber Monday.